Good afternoon, everyone. This is Stevenson Lindor here. I'm just shooting this video just to go over a couple of trades that we took together as a team. I'm going to look at Great Britain USD, USD CAD, Euro JPY, and Great Britain JPY. So I'm just going to go cover the analysis on why we took that trade as a sell. I'm also going to cover up just again because I'm getting a lot of inboxes on how to mark up charts. So I came up with a simple solution, an easier way to do it. You know, as traders, you must realize we don't know everything. As much knowledge that you think we know, you know what I mean? We're always ever evolving. You know, I'm evolving. You know, some of the other traders like Shavar has been killing it lately. He's evolving, so we get better, and as we get better, our styles, our methods become more advanced. It becomes better, it becomes more efficient, and it allows everybody around us to become profitable traders that the way we are. So I'm just going to come up with clean setups, going to go over, you know, again, you know, support, resistance, some zone areas, and, you know, we're going to look at some of the trades that we've taken over the last 24 hours. All right. Okay, so right now, as you can see, I'm looking at Great Britain USD. And I'm going to start from the beginning. Now, for those who've watched my earlier video on support and resistance, as you know, it was pretty good video. You know, some people liked it and they're able to utilize it, and, you know, they were able to, you know, implement it into their strategies, and they've, you know, some people have been able to become profitable. But then there's others that, you know, it was probably a little confusing. They don't know when to enter, they don't know when to sell, they don't know where to place their stop loss and everything. So I'm going to go over that, and I'm just going to go over a cleaner version so you don't have a bunch of lines all over your charts. All right, and you can use this basically on any time frame, and it's just a much easier guide. All right, guys. So the first thing you're going to do is you're going to find basically one of your favorite charts. So one of my favorite charts, my two favorite high time frames are the weekly and the daily. All right, because that's what allows me to catch as many pips as I do. So I love trading off the weekly, I love trading off the daily, and then I use either the 4-hour, 1 hour to, you know, as far as my entries. All right, but like I said, you can use this method and strategy on any time frame. All right, the higher the time frame, the better. The smaller ones, you know, they're not as strong. So I try to find strong time frames, apply you know, my strategy there, and then, you know, I use the small entries, smaller time frames as my entries. Okay, so first things first, I'm gonna go over the daily. I'll use that for example. Now, again, support and resistance are basically two trend lines that are placed on your charts, and support being an area of buyers, resistance being an area of sellers. So think of it as a basketball. If you bounce the basketball to the ground, it's going to bounce up. So basically the ground for the ball shooting up is buyers pushing price upwards. And if the basketball hits the ceiling and then comes back down, that's resistance. Those are the sellers pushing price down. Okay. Now, before in my previous videos, I would have you place them, you know, you would find your lows here. This would be like a support. This would be a resistance. And then you have another line. This is like support. And then you just have a bunch of lines. And even though it was effective, and, you know, some people are able to, you know, comprehend and utilize it, a lot of people, you know, just had a bunch of lines all over their charts, and it was kind of confusing. So I found a simpler way to, you know, just make everybody's life much more easy. And just with two lines on just two of your time frames, you don't have to do it on every single time frame. It's going to be much cleaner, sweeter, and you can literally just trade off of those zones. All right, so that's what we're going to do. Boom. So I'm on the daily. I'm going to take the highest point of the daily, right? This will be the highest peak resistance. So as you can see here, price went up, and then, you know, hit it 1, 2, 3, then reverse and came back down for a sell. And I'm going to find the lowest point of support, which would be all the way down here. Boom. Now, do you see how market price just stays within these two lines? So if you're trading off the daily and you caught a sell now, June of 2015, even if you didn't go back that far, This entire time, GU has been a sell. You could have just wrote it all the way down, because if market price doesn't break through resistance and it reverses, everything under resistance is basically a sell, and everything above support is a buy. So GU has been on a tremendous downtrend since June of 2015. Boom, finally hit support, a major support, in February of this year, and then boom, didn't break through, it reversed, and now this entire time it's basically been a buy. And as you can see, it's just been coming up. All right, so now that's just off the daily. Now remember, each candlestick represents a day. You go to your 1 hour, you skip over. You don't need if you're gonna use a strategy or anything like that, you don't need to look at every time frame next to each other. Spread them out. All right, so if you're looking at the daily, flip over to the 1 hour. If you're looking at the 1 hour, flip over to the 15-minute, because like the 30 and 15, 1 hour, they all cancel each other out. There's just no point. Because if you're looking at the 15-minute and the 30, then every 15, 30, you're looking at the time frame. Every 30, 1 hour, you're looking, you know what I mean? You want to give that space. You want to have that room. So if I'm looking at the daily, I want to look at the 1 hour. All right. So then I do the exact same thing on the 1 hour. So boom, I'll place a line here. That's the highest peak of GU on the 1 hour. And then I'll place it on support down here. Now, you see how cleaner this is? Now, just even early this month, see, market price hit there, rejected, hit it again. Now, here's the key. Again, guys, you want to wait for price to react to your support or resistance. You don't enter a buy right here because you see it trying to break and crack through resistance. You wait. You wait. All right. So you wait for this 1 hour because you're trading off the 1 hour time frame. So you wait for this 1 hour candle to finish. You wait for a retest or wait for another breakthrough. You see what the next 1 hour candle does. If it's trying to break through, as you can see, it was trying to. It reached a little bit higher than the previous bullish candlestick, but then a big retrace happened, and then you had your bearish candlestick. So after this candle close, I'm entering my trade around here. All right, that's where I'm plugging it in. You see that? So I'm basically waiting 2 hours. So once market price gets around your support or resistance, whatever time frame that you are trading off of, and I always suggest the higher the time frame, the better. You want to wait until you see a true confirmation. So if it's going to be a breakthrough, you'll see a candle, a strong candlestick break through that resistance, close above it, and then you'll see a next candle form on top of it. And now this resistance becomes support, and you can ride it out for a buy and just collect your X amount of pips. Now, breakthrough as it did in here, it reversed, and then this bear candlestick came down, then you can enter your sell, but you have to wait for confirmations. One of the main things that why a lot of traders fail is because they like to jump the gun. Traders swear they can predict the market and they know where it's going, instead of just letting it come to you. Just wait for it. So boom, this entire time it's just been selling. You could have rolled it all the way down to here, guys. Look at that. Well over 300 pips. From May 2nd all the way up to now, well over 300 pips. You could have just been banking. All right. So just be patient, guys. No need to jump the gun. Now, when market price is around this range, when it's choppy in the middle like GU has been, you have to understand, for every long wick that is created, the market price is going to try to revisit. So as you can see here, now it's gone on a downtrend, and you got to understand. So this is a downtrend because it came off from the top here, this resistance, boom, created a high right here. These are pullbacks. Market always trying to pull back. And then what did it do here? Another pullback. And then again, another pullback. And then last week, another pullback. And what did we see this morning? That's how I was able to call the trade I did. I said get in anywhere around 144, 800, all the way up to 145. And then have your stop loss outside of here, because this is the range of the trade. So I made sure you guys stop loss was around 1.45, 350. Have your sell, and then boom. So for all those who got in, you got yourself a nice easy 80, close to 90 pips trade. Boom. Simple. Simple, simple, simple. All right. You only want to trade off the highs and lows. All right, guys. You never want to trade like in between here. You never want to, like, one of my sell stops got activated, but I know eventually it's going to come down. But you never want to trade. You're always going to come off either the high point or the low point. All right. Because looking at GU right now, it's basically in consolidation. It's not really no true trend. Remember, you have three trends in the market. You have an uptrend, you have a downtrend, and then you got sideways consolidation, right? So expect GU to be a little bit choppy, you know, for the next several hours or next day or so. So this would be a true trend. You see, uptrend, you got a higher low, then a new higher low, then a new higher low, and then boom, retrace, lower high, boom, lower high, and now we're basically in consolidation. So expect GU to constantly keep bouncing between this range and low 1.43 all the way down to probably 143,300. All right, so that's what I'm expecting. Well, soon we'll see a breakout, and when I mean a breakout, a big large candle just explode either to the upside or to the downside. All right, guys, but that's how I was able to call GU for that sell, because I knew it was going to reach this peak high again. Who had their sell limits or who stayed up during London, you saw the fake out happened around 3-4 o'clock, boom, and then downtrend. So for those who were able to catch that, caught a good, you know, 60, 70, 80 pips, whatever you caught it for. So that was my market analysis for that. So you see, real quick and clean, guys, nothing complicated, real simple stuff. This is, you know, without overcomplicated, with stochastics, with indicators. You know, I'm constantly seeing people, you know, all this stuff on their graph and everything like that. You want to look at the market for exactly what it is. All right, every here, like I always say, look to the left in order to go right. All these wicks, these high wicks, posting and they're talking about their wick game is on entry and all stuff like that, because the market will always revisit. It'll always revisit those areas. Always, always. Either setting a new high or a new low. It has to. The market has to. All right. All these wicks always get revisited in some way or form. All right. On the lower time frames, obviously, it'll happen a lot faster. But you know, like me and Shavar will trade off, you know, higher time frames, and you know, we're trying to catch those big moves. You know, like right here. The reason why I believe GU will eventually come up here, because look at this long wick right here. Look at all these buyers that were trying to break through. So I expect the market to come back around and eventually go up. So for my original analysis, I said that over the long term, GU would reach 1.47, and I do believe that. So once it gets out of this ranging motion, and then boom, expect a breakout to the high, probably bounce one more time to the low, and then boom, jump up. All right, guys. So just simple, clean. Don't overcomplicate yourself. Don't drive yourself crazy. Stop chasing after the market just because other people are in trades and they're making money and you feel like you're missing out. No. All right. Only trade off the high or trade off the low. All right. You never want to be in between the market. Okay. All right. Let's take a look at UCAD. Let's move this. USD CAD. All right, so what's going on with USD CAD? Same thing over here, guys. I'm going to do the exact same thing. Erase everything here, and then boom. Nice clean trade. So I'm going to use the daily, for example. So this is my highest point. Boom. Find my lowest point around here. Move over to like the 1 hour, and then do the exact same thing. Boom. So now I've basically set my range. I don't have a million different lines. Market price just stays between that. So if you trade off of here, you can write it down here, and you can just basically trade from support to resistance to support. All right, and catch X amount of pips, as much as you want, as long as your screen is not just covered with so much junk where it's just clouding your judgment, because you know this is not adding up with your stochastic and your trend line and your harmonics and all this other extra stuff. Like, you don't need all that, guys. All right, look at the market for what it is. React to it, make your trade, and then boom, profit. That's it. Simple, easy. All right. So same thing over here with UCAD, based off the daily. And how we were able to catch this was I saw a nice supply area. So again, what's supply zone? Supply zone is basically areas, specific areas in the market of buyers and sellers. All right. It's kind of like support and resistance, but instead of just placing like how I just did that, just place the line up here, and I just put a support down here and down here. You don't do that with supply and demand. There are specific areas, and what you're looking for is you're looking for a little bit of consolidations and engulfing candles. All right, and what do I mean by that? So right here, this is a perfect example. We had a gap to the upside, and then you had this engulfing candle on the daily. So this is a perfect example of a zone area for sellers. And if you notice, when I cross it all the way over, what happens? Market price, every time it touches this zone area, it dropped. So that's how I know like UCAD is going to drop. UCAD is going to drop because every time it touches this zone. So for those who going to utilize supply and demand zones, how you trade in them is basically once market price touches that zone, if it's supply in this case, you can place your sell. Now remember, depending on what time frame that you're trading off of, these zones, you have to calculate how many pips from the entry to the stop loss range, because you might be in that zone for a while before that trade actually breaks out. All right, so keep that in mind, especially when you're messing with higher time frames. So you normally want to place your stop loss outside of the zone. So in this case scenario, if I'm placing a sell for UCAD, my stop loss zone, my stop loss is going to be around like 1.30, like 300 range. If it was down here, and this is a zone area, like you see how the little consolidation and then boom, this breakout candle, that's a demand zone. All right, this is a demand zone for buyers. So by the time UCAD comes down again and revisits this zone area, there's a good chance that it's going to go back up. Buyers going to take control and push price back up, because these zone areas are controlled by the institutions, by the banks, the hedge funds, the people that control the market. All right, so I like to trade with the market. I don't like to trade against it. So if the banks are buying, I'm buying. If they're selling, I'm selling. All right, I just go with what they're going. No matter how many times we might have an idea or we might think where the market is going, at the end of the day, they determine how everything is going to play out. All right, so I would mark up here. This is a zone area. Same thing. Boom. Mark up. And then you see how this candlestick before it, this bullish candlestick blast off, you see how it kind of went a little bit outside the zone. That's why you want to set your stop loss outside the zone, about 30 pips outside the zone, so you don't get stomped out, because sometimes it'll reach out, but then it'll turn around, and as you can see, saw that huge uptrend. So when you break it down to the smaller time frames, voila, boom, every time market price basically got in here, even though it tried to touch, it hit that resistance, and then boom, eventually dropped. So for those who had to sell on the 9th, you could have rolled UCAD all the way down to 1.27. That's a nice 200 pip profit right there. All right, same thing. I'm expecting UCAD did the same thing this morning. I told you guys did a post about it. Once it touches this range, get your sells ready, and then boom. So whoever took this trade, you can caught a good 70 pips. I expect UCAD to eventually come back up, because remember, these wicks, they're set. They're always trying to be revisited. Always remember that. They'll probably try to reach a high again, and then they'll come back around and then drop, making its way back down to 1.27, as I clearly have right here. Like I said, these wicks, they set the mark. They let you know, like, hey, here, I'm trying to reach this spot over here. So eventually, it's going to want to be revisited. Like how this did this pullback, touched here, what had happened? Took a while, boom, 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 but it came back and revisited. The market is always going to revisit zone areas. Always, always, always keep that in mind. All right. So when you properly know how to trade off of them, that's when you'll become a successful trader. Okay. So that was UCAD and EJ and GJ. All right. Shout out to Shavar. Called an excellent trade on this. And a lot of people made some good money with this trade. All right. So same thing. And I'm going to just switch it up for a little bit. I'm going to use like say somebody likes to, you know, maybe you might not like the day chart. You want to use the 4 hour. You can use this strategy for anything. This is the highest point on the 4 hour. Boom, set a trend line there. And this is the lowest point. And like I said, you're doing it so you know where the range is. You know the possibility of how far it can go up, how low it can go. All right. Now, don't get me wrong. This is like a support right here. This is a resistance right here, right here. But you don't want all these lines. It's going to cloud your judgment. Just want 2 lines on your charts. All right. 2. That's it. At the highest point, at the lowest point. You literally just trade off of that. So if it's more near the resistance area and it's not breaking through, you know it's a sell. If it's more near the support area and it's not breaking through, you know it's a buy. The 6 who's been buying GJ, like they're up nice. Eventually, GJ is going to compensate for all this market space it took up here and end up back here somewhere. Boom. And then do the same thing, come back down around and try to support. That's all market price does. Just keep constantly revisiting support and resistance, reaching new zones, new levels, trying to set new highs and new lows. That's all the market does. You just have to find out where you're at in the cycle. Okay. Shavar called a great trade with this one. Same thing. This is actually on the 4 hour. This is a supply zone. See it right here. Boom. Actually broke through a little bit, but so supply came through, and as you can see, every time it hit, got dropped. Boom, every time. Came up, broke down, came down again, dropped, came down, dropped, finally broke through, coming down one more time. These zone areas are super, super strong, all right? And I utilize them every single time. They're very key to my trading strategy. And then you have another zone area. And what did I just state before I marked this up? I said GJ is eventually going to come around, curve up, touch here, and I expect it once it does to come back around and drop. All right. So that was GJ. Most JPY pairs, I really like them. And sure, I'll tell you, they all pretty much move the same. Same story with Euro JPY. Same thing. So real quick, and I'll even do it on a small time frame. This is the 1 hour. Let's mark this up. That's the highest point. The 1 hour. This is the highest point. Boom. It's the lowest point. Boom. Look at that reverse candle right there. Boom. Touch that support and then just been on a buy. So same thing over here. This is a supply zone off the 1 hour. I really don't do zones on the 1 hour. I like them on the daily, weekly, and 4 hour. 4 hours is the lowest that I go. Because if you do them on the daily zones, when you do them on the daily and weekly, you'll catch a lot of pips. That's how I'm able to call my 100, 200, 300 pips. So I really like them on those time frames. Like I said, whenever you're using a strategy, the higher the time frame, the better. It'll yield you more pips as opposed to doing it on the smaller ones. So this is a zone area. Same thing. Price zone. Now, remember, you want to cover the previous candlestick that got engulfed. You want to cover the entire body, and then you want to place your stop loss outside of the zone. Now, this is the engulfing candle, so pretty much every time price, eventually when it gets back up here, it'll drop. This is another small zone areas. And same thing like support and resistance, I only look for the biggest zones. So I always look for the highest point where a zone is at, and at the lowest point. I don't like really doing in between, but here's an in between one. This is a small zone area, and it actually worked out because as you can see here, boom, market price hit here and then eventually went down. So and how you trade zone, same thing how you trade support and resistance. You can just trade from resistance to support and from support to resistance. Same thing with zone. I just trade supply zone to demand zone to supply zone, and you can just catch a lot of pips. Whereas people who are like into price action or constantly have trend lines all over the place, they would have cashed out right here, or they would have cashed out right here, or cashed out right here, instead of letting. So now you catch this whole entire movement. So who's ever in this trade right now, you're up pretty good. All right, so that's a clean, solid trade. Okay, so I just wanted to shoot this quick video, guys, just go over some of the trades that we took and why we took them. Easy setups, as you guys can see. You know, this is not hard. Everybody can do this. You know what I mean? Just clean, easy setups. Next time I do a video, I'll show you how to add in, you know, Fibonacci retracements and, you know, how you can utilize trend lines. But guys, you don't want to make this hard on yourself. You want to, you know, just practice marking up your charts, practice zone areas, constantly pay attention to the chats, the videos that are being updated to the groups, and I promise you, you'll become a successful trader. All right. So thank you for joining me on this call. And then also remember, everybody who's not been added or hasn't hooked up their auto trader, please do so. It's finally up. Servers, everything is working accordingly. So get connected and let's catch some pips.